I cut my trading time down from 8 hours per day to just 1, and my P&L went from around $6,200 per week to over $11,000 per week. And just to show you, over the last 2 months, I've made over $74,000 trading just by using these concepts that I'm going to teach you today. And before you say anything, yes, these are all 100% real transactions. As you can see, I'm going to refresh the screen for you here so you can see that these are all 100% still here. Over $74,000 of succeeded transactions into my bank account just using these 3 simple concepts that I'm going to teach you today. And I know what you're thinking right now. Well, you traded for only 1 hour per day. Didn't you miss setups? You probably left money on the table. That's exactly what I thought as well before I understood what was actually happening. These 3 principles changed how I think about session time. So once you see them, you probably aren't going to ever be able to unsee them. To be honest, these aren't just concepts. They're the reason why most traders are still trading for 8+ hours every single day and wondering why their P&L is flat. The first principle explains why the market stops paying you. The second explains why you stop being able to collect even whenever it does. And the third is honestly, nobody teaches it. So let's get to principle 1, which is going to be the saturation principle. Markets contain a finite number of high quality setups per session. And so trading past that saturation will force you into lower quality entries. So your win rate degrades as time increases. So you have to think about it like a pond, right? The first 2 hours, the pond is going to be full. Setups are going to be clean, high probability. By hour 6, though, you're not fishing anymore, right? Like you're sitting there with a line just in the dirt and there's no more water because all of the water is completely gone. There's nothing biting because there's no fish. So here's what actually happens across a session, right? It's going to be the same trader using the same amount of monitors, the same strategy. The trader at hour 6 is going to be at a completely different win rate than the trader at hour 1. Because here's the thing, the trader at hour 6 is going to be at about a 40% win rate, as you can see right here. So the trader at hour 6 is running at a 40% win rate on entries that they're actually calling valid. So that's no longer a market problem, right? That's an entire discipline problem at this point. You're taking way too many setups, trading for way too long. The open gives you a 70% win rate because of the fact that you don't have that fatigue and that window doesn't last. So every hour that you stay past it, the math begins working against you. The mechanism is in the market, right? It's not in you, but there's actual fatigue within the market itself. And so higher quality setups are going to cluster within the first 2 hours of market open. And so the pond ends up getting fished out. And then you end up trading past saturation, which means that you're going to be getting lower quality entries. This will be due to the low volume in the market. So just as a quick example here, you can see on NQ, we have this massive move that is beautiful going into market open for the first hour and a half of the day. But look at what happens when time starts to move throughout the day. You can see these candles here all have massive volume, but then as we push towards the later part of the day, the volume starts getting lower and lower within these candles. So this is actually a real phenomenon that causes your actual setups to degrade as time goes on. So if you sit on the charts for 6 hours, you're most likely going to notice that towards the end of the day, we're starting to see chop and the market doesn't actually move in your favor anymore. So it's going to be more beneficial for you to stick inside of this area of the market rather than sitting and waiting through this area of the market. So if you've ever had a great morning session and then you give it all back in the afternoon, this is why, right? You didn't make bad decisions because you're bad at trading. You just stayed way too long. The pawn was empty and then you continued to just keep chasing it anyways. Here's the part that most people miss. Even if the setups were still there, even if the market gave you clean setups at hour 6, it still wouldn't matter because you wouldn't be able to execute them the same way that you executed them at hour 1. Even if late session setups existed, there's still a second mechanism that works against you that honestly we haven't talked about yet, and that's going to be principle 2, which is the edge decay rule. Your decision-making quality has a half-life within a session. So the trader at hour 1 is going to be different from the trader at hour 5. And so if you trade past your cognitive edge, it's going to destroy your equity even when the setups exist. So even at hour 3, 4, 5, when you even have good setups, it doesn't really matter because your brain is going to be fatigued anyways. I used to think that I was just tired at the end of the day, right? Like tired happens to everyone, but that wasn't it. I was running on a degraded version of myself. So every entry that I took, it was a valid setup because I needed it to be a valid setup so that I can make my money back, right? And so that's emotional trading that's wearing analysis as an actual mask. You're no longer just like focused on your trading anymore, no longer focused on the setups. You're focused on trying to bring back something that isn't existing. And so 4 ways that your edge decays across your session, you're going to recognize yourself in at least probably 2 of these, I'll be honest. Number 1 is going to be decision fatigue. So after enough decisions in a session, your brain is going to start to shortcut, right? Like you stop analyzing and you start reacting. And so entries that should take 30 seconds to get evaluated, they end up getting waved through in like 5 seconds. Number 2 is going to be an emotional drift from earlier trades. So you had a bad trade at hour 3. And so now every entry at hour 5 is going to be caused by that loss. So you're no longer reading the charts anymore. You're going to be reading your own emotions instead. Number 3 is going to be pattern recognition slows down. So you are literally going to be processing chart data slower at hour 5 than you are at hour 1. The same edge that made you super sharp early in the session is actually going to be running at half speed. So you're not imagining it. It's actually just going to be that bad. And number 4, risk tolerance shifts up. Now, this one is probably the most dangerous, right? The longer that you trade, the more risk that you're willing to take. You want to get back to break even. You want to lock in a number that actually looks meaningful to you. You move your stop loss, you size up, right? Like these are all things that happen. You end up staying on an extra 2 hours. The desperation that you have at that point is you will try to find any position and call it a good position and put on this mask, even though it's not. For example, you know that feeling that you've had before where you placed a trade and then you immediately regretted it, right? Where you were basically looking at the chart and then 10 seconds later after you had taken the position, you were sitting there thinking, why did I take that? That's edge decay, right? That's what hour 5 does to your judgment. So even if late session setups existed, the edge decay rule explains why you shouldn't execute them anyways. So now you have it, right? The market has already ran out of its best setups by the time that the most traders are deep into their session, and you ran out of your best decision-making time at roughly the same amount of time. So those 2 degrading systems are going to be running simultaneously, and that is exactly why the 8-hour trading day starts just unfolding terribly. Knowing both problems still leaves you with the wrong question. Most traders are going to be asking, how do I stop? But the asymmetric rule asks a different question entirely. So principle 3 is going to be the asymmetric rule. And that is going to basically state that 80% of your weekly P&L is going to come from 20% of your trading hours. The other 80% of your hours produces only 20% of your results. So most of those hours aren't just flat, right? They're going to be costing you, which means that most traders are running 5 times the risk for a quarter of the return every single day, and they're calling it work. So the asymmetric rule says this, right? You have to find where the market's high quality window overlaps with your peak performance window, and then that intersection is where your P&L is going to live, right? Everything outside of it is just uncompensated risk. So you have to basically find when the high quality window of your actual setups exists and the high quality of your brain thinking process exists, right? If you can find the 2 spots where you have the best setups and you also have the highest concentration, that is where you are going to perform the absolute best in the market, and you can take a very small portion of your session and dedicate it strictly to that symmetric rule. So here's how you find your asymmetric session. So the best thing that you can do is track your trades by hour, right? You're not going to track them by signal or by strategy, right? You're instead going to track them by hour, because most traders already know their best trades cluster somewhere in that session. They just never gave themselves enough permission to stop trading after the window closes. So the asymmetric rule is actually going to be that permission. It's basically going to be like a framework for you to follow every single day. And that's honestly the real cost of these 8-hour long trading sessions, is that every hour you spend outside of your window is taking uncompensated risk. So you convinced yourself that it was actually, discipline to stay on the charts longer and study longer, but it's actually not. The craziest thing is every trader that I've worked with gets the math immediately, right? Like the 3 principles, they click fast, but the hardest part of this is basically walking away from the screen when you know that you're winning. Because think about it, when you're up on the day, the market is still moving, there's something in you that says, one more setup. Like you can see it forming, and you already know mentally that you are going to probably be in that trade. And so that moment is the real behavior execution challenge. It's harder than anything that's actually in the math. That's why naming the 3 principles actually matters, right? When you know you've hit your optimal window and you're entering saturation territory, the saturation principle gives you a reason to stop. It's not just like willpower, right? It's the math, the literal math is telling you to stop. And that's a completely different conversation that you're actually having with yourself in that moment, instead of just letting your own brain dictate you to do something that you normally wouldn't even do. And so the mechanism that I use is actually a hard session timer. So when the timer hits, the charts are basically closed, right? I'm not going to look at these charts anymore. So after a certain amount of time on this chart here, you can see, for example, 9:58 or 10 a.m. The moment that 10 a.m. hits, I am most likely 100% going to be done and my charts are completely closed, right? I don't look at the charts anymore after this time because I know that this is the window where I'm most likely not going to perform the best. And so these three principles are the framework, right? The timer is going to be like the actual execution behind it. And if you don't have both of these, then you're probably going to stay in a very, very weird spot. So remember, guys, like when I cut from 8 hours to one, I was cutting 7 hours of actual uncompensated risk, right? I had convinced myself that those hours were productive, but in reality, they weren't. I was putting in a 9 to 5 every single day, even though I did this for freedom. This number right here that you're seeing, this $75,000 of succeeded payouts to my bank account, that's because I was 7 hours fewer of uncompensated risk every single week. Not because I got better at trading, it's because I stopped paying for losses with hours that I knew that I was never going to win back. And so every hour you trade outside your optimal window puts you against yourself. And remember, you are the house. And remember, guys, you already saw the numbers at the start of this video and at the end, right? That's not theory. It's applying what these three principles look like in real sessions. So if you're serious about actually working directly with me to identify your optimal session window and tighten your actual entries, I take 10 people every single month. It's first come, first serve. The link is going to be in the description. It's the first link, simplyoptionsacademy.com. If you're interested, book a call with me or my team, and we'll go over your entire trading history, figure out exactly what we can do to help you, and get you to move forward as a trader instead of being stuck at where you're currently at. Track your hours this week. The data is going to tell you everything.